depreciation expense. This is depreciation expense. So again, you would have different depreciation expenses from your uh, balance sheet, or from your notes to income statement, and based on that you can populate the past data of depreciation expense. So you would have different items within this fixed asset schedule in your notes, and from those notes you can find out the details and then put it in. What I have done here is, just for explanation purposes, I have taken total depreciation, total accumulated depreciation, so I know the accumulated depreciation. So first of all, I took the total depreciation expense. Where do I find total depreciation expense from? From notes to income statement. So in income statement you have depreciation expense, and if you go to notes to income statement you can find out the total depreciation expense. So this is my total depreciation expense 3078. Within this depreciation expense there are different types of depreciation. There is some depreciation pertaining to property, plant and equipment, some depreciation pertaining to intangibles, and some depreciation pertaining to non-current assets. So from this total depreciation and amortization, I have subtracted depreciation related to other non-current assets and amortization of intangibles. If I subtract these two items, what am I left with? I am left with the depreciation of property, plant and equipment. So I took total depreciation and amortization. I subtracted other non-current assets depreciation. I subtracted amortization of intangible assets. And then what am I left with? I am left with depreciation expense for the property, plant and equipment. So that's how I have calculated depreciation expense of property, plant and equipment here in this cell. Taking the, yes. So you have total depreciation. Where do you find this out? You can find it out from income statement notes. Or this is the item which is also recorded in cash flow statement. And why does it go to a cash flow statement? Because it is added back to net earnings, that is it, a non-cash item. So this total depreciation contains, so if we go to the notes you will find out that this total depreciation contains three different items. So there is depreciation for property, plant and equipment, there is depreciation for intangibles, and there is depreciation for other non-current assets. So this total depreciation amount, if I look into income statement, or if I look into cash flow statement, or if I look into notes, this total depreciation amount is 3078. Even in fixed asset schedule provided in annual report, you can find it this total depreciation amount there. This is 3078. You can also find out the depreciation of intangibles from there and depreciation of other non-current assets, right? So if I subtract depreciation of intangible and depreciation of other non-current assets from total depreciation, what will I get? I will get the depreciation for property, plant and equipment. So simply what I have done is that I have subtracted the depreciation expense of other non-current assets and intangibles to arrive at the depreciation expense for property, plant and equipment. So this is the depreciation expense of property, plant and equipment. Again, for individual items, you can simply find these out from notes or from fixed asset schedule. Here what I have done is that I have taken a prorated average. So what I have done is I know the total depreciation and I know the value of these assets, cost of these assets. So I have divided the total depreciation in proportion to or in proportion to the cost of these assets, because I know that straight line method is being used for all the assets. So I have taken an assumption that depreciation would approximately be similar to cost averages or cost proportion. So for example, I took this depreciation expense. This is the total depreciation expense of PPE, which is 2329. So total depreciation expense is 2329. Now within this 2329, I have to divide it into different components like machinery, like other assets, or construction in progress, buildings and all that. So how did I divide it? I looked for the cost and divided and distributed the total depreciation expense in proportion to cost. So if you look into it, building have a cost of 6885. So what I primarily did was I took the cost of building 6885. I divided it by the total cost, which is 39866, 39866, and then I multiplied it by the depreciation expense of PPE, which is 2329. And I did the same for all these assets, and when I do the same for all these assets, I will get the depreciation breakup. Any problem so far?
How will our working differ if we use reducing management?
Yeah, so if you are using different method, then what you do is, or what I am advising you to do is, even in this case, what you need to do is that go to notes, and from those notes to financial statements or annual report notes, you can find out the exact expense for all of these assets. So take the exact expense from all of these assets and put that here.
And how so, about we forecast it?
Sorry?
Forecasting is getting it.
Yes, so forecasting we are just coming to it. Okay. So for this, for 2016, what I have done is that if you do not have information, then this is one metric that you can use to divide. Otherwise, if you have information available, just use that information. This is the actual data. This is the not the. Oh, yes. Hard code, exactly. That's what I'm saying. From fixed asset schedule, you can just hard code the numbers. You can take out the numbers from there and hard code the numbers here, right? Because it is the actual data 15 and 16, so you can just hard code it here. वो यही होता है ना, प्रॉपर्टी प्लांट एंड इक्विपमेंट, यही होता है, प्रॉपर्टी प्लांट एंड इक्विपमेंट. So these fixed assets, this fixed asset schedule will contain all the fixed assets which are there and all the depreciation which are there. So within this, buildings may go to administrative expense, machinery may go to cost of sales, and so on. So some would go to administrative, some would go to cost of sales. This contains all the assets and all the depreciation. But even if you hard code these numbers, just try hard code these numbers. Just try to put formulas in accumulated and net book value, so that you know your formulas are accurate. Because then your answer for net book value, final answer, should match with the number given in the notes to financial statements. So this is what you did. You have the depreciation expense. The key idea is that you should be able to put in cost, then you should be able to put in additions and disposal, then you should be able to put in the depreciation expense, then you should be, based on depreciation expense, you should be able to put in accumulated depreciation. Accumulated depreciation will simply be previous year's depreciation plus this year's depreciation expense, making any adjustment for disposal or addition. Moving on, then you have net book value. You can simply arrive at your net book value. How do you arrive at net book value? You take cost, you make adjustment for addition and disposal, and then you make adjustment for accumulated depreciation at the end to arrive at the net book value. So this is your net book